Okay, picture this. What if a major Wall Street aligned firm, a name you'd usually see trading on NASDAQ, just poured $500 million into a blockchain? And not just any blockchain, but one that, let's be honest, many people had kind of written off or at least saw as a pretty risky bet.
Yeah, it definitely makes you sit up and take notice.
Exactly. So get ready for maybe one of those aha moments today, because we're going to connect the dots between, well, the pretty buttoned up world of traditional finance and the, let's say, vibrant future of crypto.
Vibrant is one word for it. Chaotic might be another sometimes.
Huh. Yeah, fair point. But today we're not just scratching the surface, we're diving deep headfirst into a really pivotal story, one that could genuinely redefine a big chunk of the Web3 landscape.
So what's the headline we're digging into?
We're talking about Helius, NASDAQ-listed Helius, and their massive $500 million commitment to build a dedicated Solana treasury.
Wow, okay, $500 million for Solana. That's significant.
Right. And this isn't just another crypto investment announcement, the kind that pops up daily. No, this feels different. It's strategic, it's long-term, and it's focused on one specific layer one blockchain.
Solana, which, as you said, has had its share of ups and downs. Meteoric rises, sure, but also those pretty challenging network outages.
Exactly. So our mission today really is to unpack what this $500 million bet truly signifies. What does it mean for Solana itself?
And for the wider crypto world, right? The whole layer one competition.
Precisely. And maybe most importantly, what does it mean for you listening right now? Whether you're just keeping tabs on crypto or you're a serious investor, or maybe you're just curious about where Web3 is actually headed.
We want to cut through the noise.
Yeah, cut through the noise, deliver the essential insights, the nuances, and help you understand the ripples this thing is sending out.
And just so everyone knows where we're coming from, our insights today, they're pulled from a pretty solid stack of sources. We've been digging into the financial news reports, like Cointelegraph's coverage when the Helius news first broke, plus deeper research from firms like Masari. They do great work on crypto fundamentals. And we've also looked at ecosystem reports straight from the Solana Foundation, kind of getting their perspective.
And we've mixed in broader market data too, right? Like CoinShares fund flow reports, Electric Capital's developer stuff.
Exactly.
Yeah.
Trying to get that full picture. So this deep dive really distills the critical info, gives you the context without just drowning you in data.
Okay, perfect. Now, before we really get into the thick of Helios's big move, just a quick reminder. If you find these deep dives valuable, if you're getting something out of this.
Yeah, it genuinely helps us out.
It really does. Taking a second to hit that like button, maybe drop a comment with your thoughts, or subscribe if you haven't already. It makes a huge difference.
Seriously, it helps support the channel, gets us seen more in the algorithm.
And lets us keep making this kind of in-depth crypto content for you. So thanks in advance for that.
Okay, let's do it. Helius and Solana.
Right. Let's unpack this beast. The massive headline. NASDAQ-listed Helius commits $500 million to a Solana treasury. $500 million. Straight into the Solana ecosystem.
It's a number that just grabs you immediately. But like you said, the story is way deeper than just the dollar amount.
Absolutely. What strikes me first, and you mentioned this, is who is doing this. Helius. NASDAQ listed.
Yeah, that's key. It immediately gives this whole thing a layer of, traditional finance legitimacy. TradFi cred.
Right. This isn't some anonymous crypto fund. It's a public company operating under all the scrutiny that comes with that.
Exactly. And when we talk about a Solana treasury, what does that actually mean? It means a big pool of money, specifically set aside, dedicated, ring-fenced, just for Solana.
Right. Not just buying SOL tokens on Kraken or something.
No, not at all. It's not about short-term price speculation. It's a structured, strategic pot of money designed to boost long-term development, fund innovation, support stability, right there within the network itself.
So there's a real difference between just investing and setting up a treasury.
Huge difference. A general investment might be, like you said, speculative, looking for a quick win. A treasury implies something much more involved, proactive, maybe hands-on, possibly even influencing governance down the line. It's about funding projects, attracting talent, building out the core infrastructure.
Building value for the long haul, not just chasing a pump.
Precisely. Building enduring value. That's the idea.
And the scale of this, our sources are saying this is one of the largest institutional treasury allocations we've ever seen, tied directly to a single layer one blockchain.
It really is up there.
Yeah.
And think about the distinction. This isn't VC money going into one specific dApp on Solana or one particular project.
No, it's for the whole foundation, the layer one itself.
Exactly. which suggests a much, much broader vision from Helius.
So, connecting this to the bigger picture, what does that scale tell us about Helios's thinking? It sounds like a massive long-term bet.
I think that's spot on. This kind of scale points to a really deep, long-term strategic commitment. VC bets on specific projects. They're important, obviously, but they're often looking for an exit in, 3, 5 years?
Yeah.
High returns on one specific thing.
Right.
A treasury for the foundational layer. That's a totally different game. It signals Helius sees Solana as a core piece of Web3 infrastructure for the long run, maybe decades.
Wow. So they're potentially betting on Solana being like a fundamental backbone for the future, for DeFi, for institutional stuff, maybe even mass consumer apps.
One could definitely speculate along those lines. Think about the infrastructure behind, say, Visa or Swift today. Helius might be seeing Solana as potentially playing that kind of role in the future digital economy.
That's a big vision.
It is. And for you, listening, this isn't just a flashy number. It's a powerful statement about Solana's potential lifespan, its growth path.
Yeah.
It suggests a major public company sees Solana not as some fleeting crypto fad, but something potentially enduring, something with room to grow massively and see widespread use.
It's like a signal saying, we think the real innovation, the next wave, might take root here.
Exactly. It's a strong signal about where they believe serious value can be built.
Okay, so let's dig into why this matters so much. What's the real so what here for the market, for anyone watching crypto?
Well, first off, it's just massive institutional validation for Solana. Huge confidence boost.
Right. And let's be real, that confidence is especially striking given Solana's history, right?
Yeah.
Those network outages were, well, pretty public and damaging at times.
They absolutely were. And that's what makes this timing so interesting. Solana definitely faced major stability challenges. It built up this narrative, fair or not, of being maybe unreliable sometimes, caused a lot of skepticism.
I remember the debates.
But now you have this $500 million commitment from a NASDAQ-listed firm like Helius. What does that tell you? It seems to signal loud and clear that these institutional players are either looking past those historical blinks, seeing them as growing pains.
Or maybe they think the tech has matured enough now, that the fixes are in place.
Exactly. Or they firmly believe the underlying tech and all the development work have gotten good enough to handle it. It suggests a really deep conviction in the long-term plan, the technical roadmap, that now outweighs those past problems.
I mean, for a public company to commit $500 million, the due diligence must have been intense.
Oh, absolutely. Think about the internal hurdles, the risk assessments. They must have come away with a very positive outlook on Solana's future stability and potential.
Because for you listening, if you were maybe hesitant about Solana because of those outages, because of that past narrative.
This news might make you pause and reconsider, right? It's about seeing where the sophisticated institutional money is placing its trust and asking why. Maybe they're seeing something that the general market missed or dismissed earlier. It could really be a turning point for how the network is perceived.
And it's not just a symbolic thumbs up, is it? This is actual cash, a treasury war chest, as some are calling it.
Precisely. This $500 million gives Solana concrete, actionable resources. Money to fuel aggressive ecosystem growth, offer really attractive developer incentives, and critically, boost liquidity across the network.
Okay, let's break that down. What does ecosystem growth actually look like in practice?
Well, think of it like ecosystem-level venture capital. This money can fund a whole range of new projects getting built on Solana. It can support essential infrastructure that everyone relies on. It can back ambitious community programs. It's like fertilizer for the whole garden, fuel for innovation.
Got it. And developer incentives, why is that so important?
Developers are everything. They're the lifeblood of any blockchain, this kind of capital. It can attract the best engineers from all over the world. It can fund big hackathons with serious prize money, provide grants for cutting-edge R&D, basically create an environment where top talent wants to build.
Makes sense. You need the builders.
Absolutely. Retaining them is key, too. And then there's liquidity support. This is crucial, especially for DeFi.
Right. Explain why liquidity matters so much.
Okay, so good liquidity means trading assets is smooth and efficient. Prices are more stable. Capital can move around easily within dApps. It basically makes everything work better for users. Less slippage when you trade, more reliable financial tools for builders to work with.
So this money could potentially speed up Solana's development quite a bit, maybe attract a flood of new projects?
It really could, especially projects that can take advantage of Solana's speed and low costs. Imagine gaming, high-frequency trading, social media-type apps. things that need fast, cheap transactions.
And for you, listening, what's the takeaway? More stuff being built on Solana.
Yeah, potentially a much more vibrant, robust ecosystem. More dApps to use, maybe new investment opportunities within Solana, possibly even tools for you to build your own thing on a stronger platform. More action, basically.
Okay, now here's where I think it gets really interesting strategically. This $500 million from Helius, it's not just money. It really helps solidify Solana's narrative, right? As that next-gen Ethereum alternative.
Oh, absolutely. It pours serious, institutional-grade fuel onto that fire. That narrative has been building for a while. Solana's always pushed scalability and speed as its big selling points, processing way more transactions, way cheaper than, say, Ethereum historically.
Right, the speed and cost arguments.
Exactly. Maybe an analogy helps. If Ethereum, with its incredible security and decentralization, is like the super reliable, powerful mainframe computer,
Okay.
Solana aims to be more like the sleek, high-performance supercomputer built for specific high-volume tasks, parallel processing, lightning speed. Ideal for things like gaming, real-time payments, maybe consumer apps that need instant feedback.
And this $500 million gives that narrative some serious weight.
Serious weight. It's not just talk about technical specs anymore. Now they have significant capital to actually fund the development, attract the users, and execute market strategies to make that vision a reality. It adds financial muscle to the technical claims.
So for you, watching the whole crypto space, this just turns up the heat on the competition, makes that layer one race even more critical.
Absolutely. It intensifies everything. The competition,
Yeah.
the strategic maneuvering, it makes the whole race for blockchain dominance much more compelling to watch. It's a major move on the chessboard.
Okay, let's shift gears slightly. What about the impact on different groups? Let's start with people actually holding SOL tokens. What does this mean for them?
Well, fundamentally, it signals deep, long-term confidence from a major player. And that could translate into pretty significant price support for SOL. It might even change how people view its risk.
How so? What's the psychology there?
Institutional backing, especially like this big money NASDAQ-listed firm, it often creates a kind of psychological floor under the price. It can reduce that wild volatility because there's this belief that someone big with deep pockets and a long view is committed.
Not just speculators jumping in and out.
Exactly. When a public company makes a huge long-term allocation like this, it's not a quick flip. It's a strategic bet on the core value, the future growth. That tends to attract other long-term investors, signals stability, maybe lowers the perceived risk for others thinking about getting involved.
But it's important to distinguish, right, between short-term hype and long-term strategy.
Always. For you listening, you have to ask, is this $500 million treasury going to pump SOL to the moon tomorrow? Or is the main impact a slower, steadier strengthening over time? That's key for your own thinking.
But it definitely adds a layer of reassurance, legitimacy, from a serious player.
Undeniably, if you hold SOL, it's a major vote of confidence in its perceived value and future prospects, coming from a very credible, regulated source.
Okay, what about altcoin traders, the ones always looking for the next big narrative, the next rally?
For them, this move could position Solana as a really strong leader in the next potential Layer 1 rally narrative. It makes Solana a potential bellwether.
How does that work? How do narratives drive trading?
Narratives are huge in crypto cycles, sometimes almost self-fulfilling. When big money like this flows into one specific ecosystem, it grabs attention, not just for that one coin, but potentially for the whole sector.
Like, okay, institutions are interested in fast layer ones now.
Kind of, yeah. Traders look for these signals. Solana, with its backing and treasury, could become the focal point. Capital might flow not just into SOL, but into other similar high-throughput Layer 1s too. It can spark sector-wide interest.
So it could influence trading strategies beyond just Solana itself, looking for sympathy plays or sector rotation?
Exactly. It can create that flight to quality within a specific niche. So for you as a trader, this is a signal. Watch Solana closely, not just for its own price, but as a potential leading indicator for broader market trends. It could be a real bellwether for institutional appetite in scalable blockchains.
And thinking even bigger picture, could this Helius move actually set a precedent? Could we see other big firms doing similar things with other blockchains?
That's a fascinating possibility. What's really interesting here is how institutional investing sometimes has this herd mentality, maybe following the leader is a better way to put it, but with lots of due diligence first.
Right, once one reputable player makes the jump.
Exactly. Especially a NASDAQ-listed firm like Helius. If they make a move this big, and it seems legitimate, and maybe starts showing positive results, more developers, more activity.
Then others might feel it's safer to follow, de-risked.
Precisely. They might think, okay, Helius did the heavy lifting, they vetted this, maybe we should look closer too. If this trend catches on, we could enter a new phase where these big, dedicated treasuries become a standard way for institutions to engage with promising blockchains.
That could lead to a more segmented landscape, couldn't it? Different institutions backing different chains, specializing.
It could. Maybe specific chains get known for certain institutional backers or certain use cases funded by those treasuries. So what does this mean for the future of crypto investing overall? It might signal a shift towards a more structured, maybe more resilient, possibly less purely speculative approach from big money.
More about building fundamental infrastructure, less about just trading tokens.
That seems to be the implication, yeah.
Yeah.
A potentially more mature phase of institutional involvement.
Okay, let's dive deeper now into the wider Web3 implications. These treasury funds. They could be rocket fuel for attracting developers and expanding key areas like DeFi, NFTs, and especially gaming on Solana, right?
Oh, absolutely. Here's where it gets really interesting in terms of actual practical applications and speeding up Web3 adoption.
How so?
Well, capital is the engine of innovation, right? In any field, Web3 included. With $500 million, Solana can seriously boost its efforts in these high-growth areas.
Let's take DeFi first. What could we see there?
We can see an acceleration of new, maybe more complex DeFi protocols, better lending platforms, sophisticated derivatives. More capital means more incentive for builders to create secure, user-friendly financial apps that can actually compete with traditional finance, maybe even beat them on efficiency or access.
And NFTs, Solana already has a pretty active NFT scene.
It does, but this could turbocharge it. Think enhanced marketplaces, maybe attracting big brands or major artists to launch collections there. Funding for better creator tools. Making the Solana NFT space even more vibrant, cheaper, faster. Imagine high-volume mints and trades just becoming effortless. That could pull in way more mainstream users.
Okay, and gaming. That's often talked about as a huge potential gateway for crypto adoption.
Exactly. Dedicated funding here could really spur the development of high-quality, actually fun blockchain games. Deeper integration of in-game NFTs, maybe improving the whole player experience beyond just speculative play to earn.
We've seen other ecosystems use funding like this effectively, haven't we?
We have. Look at Polygon, for example. They used aggressive funding, developer grants, to really ignite growth in DeFi, NFTs, attracting big names. It's a proven playbook. Strategic capital injection drives expansion and utility.
So for you, the user or enthusiast, this means more choice, more things to do on Solana.
Pretty much. A significantly wider range of applications, more ways to get involved, a richer set of experiences within the Solana ecosystem, more innovation, hopefully leading to better products.
Now, that combination, more capital, more liquidity, plus Solana's speed narrative, could that reignite the whole ETH versus SOL debate? Bring it back with more intensity?
I think it almost certainly does. This has always been one of the big layer one rivalries, hasn't it?
Yeah, the classic trade-off narrative.
Right. Ethereum, the established giant, incredible security, huge community, maybe seen as more decentralized, but sometimes slower, more expensive. Solana, the challenger, built for raw speed, low costs, massive transaction volume, but maybe with questions about decentralization or path stability.
So Ethereum's strength is its track record and network effects. Solana's is performance.
Broadly speaking, yeah. Ethereum proponents emphasize its battle-tested security, its decentralization, its foundational role. Solana fans point to handling tons of transactions per second super cheaply, making it great for things needing instant results, gaming, fast payments, complex DeFi.
How does this Helius money shift that dynamic?
It shifts the balance, particularly around liquidity and institutional confidence. Those were often seen as Ethereum advantages due to its age and size. Now, Solana gets this huge injection of institutional cash and a dedicated treasury. That gives it serious financial muscle to fund development, attract users, maybe address past weaknesses, and really strengthen its competitive position.
So it's not just tech talk anymore. It has real implications for users choosing a chain.
Absolutely. For you deciding where to transact, which dApps to use, maybe where to invest long-term, this rivalry matters. It raises that big question again. Can Solana seriously challenge, maybe even overtake Ethereum if this kind of institutional backing continues? It just highlights how dynamic this whole space is.
And purely from a regulatory angle, having a NASDAQ-listed firm like Helius involved, that must add a ton of legitimacy, right? Especially in those TradFi circles that are still pretty wary of crypto.
Oh, it's huge from that perspective. What's fascinating here is how it starts to build a bridge. between, the Wild West perception of crypto and the structured, regulated world of traditional finance.
How does that work?
Well, public companies like Helius,
Mm?
they operate under incredibly strict rules.
Yeah.
Compliance, regulations, investor protection. It's intense. So when they make a big public move into a specific blockchain ecosystem like Solana,
It sends a signal.
it sends a powerful signal. It suggests a level of perceived compliance, stability, maybe adherence to best practices that regulators, lawmakers, even other cautious institutions might really notice and appreciate. It's almost like an implicit endorsement from a player who gets regulation.
So connecting the dots, this could maybe pave the way for more traditional financial products built on Solana, or even help with regulatory clarity for Solana itself.
It's definitely possible. Regulators might start seeing Solana as more mature, more institutional grade because these kinds of players are involved. It could make them more comfortable. For you, this potentially changes the risk assessment, suggesting crypto is maturing and gaining mainstream acceptance.
Okay, finally, let's talk real-world adoption. Could these treasury-backed incentives be the thing that really pushes Solana into areas like real-world DeFi, tokenizing assets, maybe even that AI plus blockchain convergence?
This is where it gets really exciting, I think, where blockchain stops being abstract and starts touching everyday life or transforming industries.
Talk about real-world DeFi first. How's that different from what we have now?
A lot of current DeFi is still quite crypto native, right? Lending, borrowing crypto assets. Real-world DeFi aims to bridge that to tangible assets, real economy services. Imagine getting a loan against tokenized real estate or making supply chain finance totally transparent on-chain, or even tiny instant payments for, say, electricity usage. This capital can fund the tough infrastructure needed to link the physical and digital.
And tokenization, bringing real-world assets onto the chain.
Yeah, RWAs. Think tokenizing everything, property, art, commodities, maybe even company shares, making them easier to trade, more transparent, accessible to more people globally. A well-funded ecosystem like Solana's can provide the tools, the legal frameworks, the market incentives to really drive that.
And the AI plus blockchain link? That sounds futuristic.
It is, but it's coming fast. Solana's speed and low latency could be incredibly useful for AI. Imagine AI needing super fast, verifiable data, or needing an immutable record of its decisions, or AI agents needing to make tons of tiny, cryptographically proven transactions.
Like AI trained on blockchain data, or AI using Solana for payment.
Exactly. The possibilities are huge. So if we connect this all to the bigger picture, this funding isn't just about crypto speculation. It's potentially about building the infrastructure for the Internet of Value, where digital and physical assets merge and smart systems interact using verifiable, tamper-proof data.
That's a powerful vision. Okay, to really grasp the weight of this Helius move, it helps to look back, right? At historical context, other similar plays in crypto, we've seen successes, but also some major flameout.
Oh, definitely. History, especially in a fast-moving space like crypto, is packed with lessons. Looking at past examples gives us a critical lens for thinking about Helius and Solana.
So what are some relevant examples we should consider?
Okay, let's touch on a few key ones. First, think about Jump Crypto and Solana early on.
Right, they were big early backers.
Huge. Jump was pivotal in providing essential liquidity and building core infrastructure when Solana was just starting out. Their early backing wasn't just cash. It was a massive vote of confidence that helped Solana gain traction and survive those early technical hurdles. It shows how vital that initial institutional belief can be.
Okay, good example. What else?
Well, you can't not talk about the FTX collapse in Solana.
Oof, yeah, that was rough.
Extremely rough. FTX and Alameda weren't just big SOL holders. They'd invested heavily across the Solana ecosystem. Their collapse caused a massive liquidity crisis. SOL's price crashed. The reputational damage was immense. Many thought Solana was finished.
But it wasn't.
Clearly not. And the fact that institutional belief remained and has now arguably strengthened with Helius is really telling. It shows resilience, sure, but also suggests a deeper conviction in the core tech that goes beyond any single entity or market shock.
Yeah.
Helius must see fundamental value that survived even that catastrophe.
Okay, what about comparing it to how Ethereum manages its funds?
Good point. The Ethereum Foundation's treasury management is another angle. Ethereum has benefited immensely from having a structured treasury funding core development, research like the merge, community building, for years.
A long-term strategic approach.
Exactly. Solana can learn a lot from Ethereum's model, how to deploy capital strategically for sustained innovation, not just short-term hype. Building for the long haul.
Are there examples of other chains using big ecosystem funds aggressively?
Absolutely. Look at Polygon's ecosystem funds. They famously threw billions at attracting projects and developers. It's a very direct comparison showing how massive capital injections, strategically deployed, can just supercharge growth across DeFi, NFTs, even enterprise use cases. Polygon's success is heavily tied to that funding strategy. Helius might be looking at that playbook.
Any others?
Maybe Avalanche's $200 million Blizzard fund. They launched it strategically, especially during bull markets, and it really helped accelerate adoption by incentivizing builders. It highlights how timing can matter, using funds to capitalize on market momentum.
Okay, so bringing it all back to Helios, how does their move compare to these examples? Does it mirror them or is it different?
It mirrors the core idea. Dedicated capital fuels ecosystem growth, like we saw with Ethereum, Polygon, Avalanche. But Helios is different too. As a NASDAQ-listed firm, they bring this unique TradFi credibility, maybe more regulatory comfort than some earlier crypto-native funds.
And they're building on a chain, Solana, that's already overcome some major challenges, but also has a more mature tech base now.
Exactly. It faces the challenge of that history, but also has the advantage of more battle-tested tech and maybe a more experienced dev community than some of those earlier examples had at the time. So for you, listening, understanding these parallels helps put the Helios news in context.
Yeah.
You can anticipate potential outcomes, spot patterns, maybe even see potential pitfalls based on what worked or didn't work before. Makes you a much smarter observer.
That's brilliant context. Really helps frame how significant and maybe how different this Helios move is. Okay, so for you listening, if you want to track the actual impact of this $500 million bet get beyond the headlines, what should you really be watching? What metrics, what charts, what kind of analysis tells the real story?
Yeah, that's the crucial next step, isn't it? How do you, the listener, measure the tangible results? Beyond just the initial buzz, there are specific things we can track.
Okay, lay them out for us. What's number one?
First, maybe the most obvious, is SOL price action, pre- and post-announcement. Now, short-term moves are noisy, but watch how the price reacts initially, and then how it behaves over weeks and months. Is it just a quick spike, or do we see sustained growth, maybe higher lows?
Yeah.
That tells you about investor sentiment, short-term hype versus long-term belief.
Makes sense. What's next? Something more fundamental.
Absolutely. Second, and this is critical, on-chain Solana activity. This is where you see if people are actually using the network more.
What specifically should we look at there?
Three key things. Daily transactions. Is network usage going up consistently? That means growing utility. Active wallets. Are new users coming in? Are old users sticking around? That shows user growth and engagement. And DeFi TVL growth, total value locked. Is more capital flowing into Solana's DeFi apps? That signals trust in the ecosystem's financial side.
Okay, price action, on-chain activity. What else?
Third, we need some kind of treasury impact analysis. We should try to compare how Helios deploys these funds versus how, say, Polygon or Avalanche use their funds. Where's the money going? Developer grants, infrastructure, marketing, liquidity mining, and crucially, is it working? Are we seeing results in developer numbers, new projects, user growth? Defining what success looks like for this treasury is key.
So, tracking the money and its results. Got it. Number 4.
Fourth, compare SOL versus ETH performance year-to-date, YTD. To really gauge the impact of institutional flows in this narrative shift, you need to see how Solana performs relative to its main competitor, Ethereum. If SOL starts consistently outperforming ETH, especially alongside those positive on-chain metrics, that could signal a real shift in institutional preference or a fundamental re-rating of Solana.
Right. It's not just about SOL going up, but how it does compare to the benchmark.
Exactly. Relative strength matters. And finally, fifth, keep an eye on NFT and gaming volumes on Solana. These are key consumer-facing sectors. Growing trade volumes for NFTs, successful game launches, more active users in Solana games and NFT marketplaces. That shows real traction in high-growth areas. It validates the network's appeal beyond just finance.
Okay, that's a solid list. Price, on-chain data, treasury effectiveness, comparison to ETH, and NFT gaming volumes. That gives you, the listener, a real roadmap to track this.
Exactly. It helps you become a much more informed observer or participant and gauge the real long-term impact of this huge institutional move.
Fantastic. Well, that was quite the journey. We've really navigated Helios's $500 million bet on Solana, unpacked what it means, looked at the impact on everyone from SOL holders to traders, and explored the bigger ripples across Web3.
Yeah, to quickly recap the core takeaways.
Yeah.
Helios's $500 million treasury is, first, a massive institutional thumbs up for Solana, showing confidence despite that tricky past. Second, it provides serious firepower for ecosystem growth devs, projects, liquidity. And third, it definitely cranks up the heat in the Layer 1 competition. adds a real heavyweight contender.
And for you listening, why did we dive so deep? Because this isn't just about one company or one coin. It's about understanding the powerful forces shaping the future of DeFi, digital assets, the very plumbing of Web3. Hopefully, this deep dive gives you the knowledge and tools to navigate this fast-moving space with more confidence.
Absolutely.
So as we wrap up, let's leave you with one final, maybe more provocative thought to mull over, something that goes beyond what we explicitly covered.
Okay, let's hear it.
Beyond the money, beyond
Yeah.
the tech boost. How might Helius's deep institutional ties, their TradFi background, reshape not just Solana's technology, but its actual governance, its community dynamics, its political standing in that fierce Layer 1 competition?
That's interesting. The softer political side.
Yeah. Will this half-billion bet set a totally new standard for how TradFi engages with decentralized ecosystems, moving from passive investment to active strategic development? Or is this just a really bold, maybe unique move by Helius that other big firms will watch cautiously hesitant to replicate until they see how this massive wager actually plays out over the next few years?
That is a profound question. Is it the start of a trend or one-off outlier? And what are the second-order effects on Solana's culture and direction? Definitely something to keep thinking about. It really could shape the next chapter of Web3.